UVW, what's it all mean? You hear all kinds of talk about those letters in connection with what the recovery is going to look like. And so here on the program Dollars and Cents with me, your host Joel Garris of Nelson Financial Planning, we wanted to take a moment and explain to our listening audience exactly what that all means. You hear people kind of throwing these letters around, and what's it all mean, and what are some of the projections of what the numbers are that are associated with those letters. So if you think of it, if you visualize the letter, right? So a U, okay, is a steep line down, and then sort of a dip that lasts for a little bit of time, and then it goes up the other side. Well, if you think of that in terms of economic terms, you see sort of that front part, right? So that front part, that dramatic drop, if you will, that would be the leading edge of a U, that of course represents all of the shutdowns that occurred and the massive amounts of unemployment that's occurring. That's sort of the front edge of the coronavirus pandemic. And then the U part, the elongated bottom of the U, if you will, suggests that economic activity could stay relatively low for the second and third quarter before recovering, and then the backside of the U is a much sharp increase. And so if you compare the U to what you could potentially happen economically, that would be the kind of scenario where you would say, okay, the economy is behaving like a U. A V shape is obviously very steep, right? It goes down, okay, leading edge, decline, and then a very quick short turnaround, and then economically things go back up. So again, that steep drop certainly took place, right? During the month of April, unemployment numbers going up to 25 million people. The V shape, I think, is generally described as the sort of the best case economic situation coming out of this pandemic, rather than a quarter or two hanging out, in low economic mode like the U would suggest. The V, okay, it really becomes a much shorter period of time, a matter of a few weeks or months before you immediately start to turn around and start seeing that economic recovery again, versus the U, where it might take 4 to 6 weeks. The V shape, it's a 1 or 2 month type of turnaround. Again, V shape, as you might well imagine, is the best case scenario. And then the third one that you hear a lot of talk about is, of course, the W, where you kind of see that decline on the leading edge. You see some kind of an upswing, some kind of a recovery, but then we're struck with more coronavirus cases. The numbers flare up again. You wind up having to have orders reinstituted to stay at home, those kinds of things. And then obviously that's, the other part of the W, which is another decline, and then ultimately a turnaround before it then recovers. So that's kind of how the U, where you drop dramatically a couple of quarters or so 6 to 8 months, where you're kind of getting into this recovery part, and then a sharp recovery back up. V, best case scenario, okay, you're down, but you're only down for maybe 1 or 2 or 3 months, and then a sharp recovery right back up. And then of course the W, you're down, start to see some kind of a recovery, but then go back down because you have to continue to put stay-at-home orders and things like that in place. So that's the UVW economically of those letters that you hear getting tossed around a lot. So let's kind of put some numbers on those 3 scenarios. And frankly, when you start to put the numbers on the scenarios based upon the economic data, it's pretty staggering. So on the V, which is the best case scenario, you would see economic growth in the second quarter decline by 15% on an annualized basis. And again, we talk about economic numbers, we talk about them on a quarterly basis, but then you annualize them. So it doesn't fully reflect what's going to happen in that year, but it's like if you take the rate for the quarter and then normalize it out to the year. So 15% decline in GDP, that would be hands down the worst on record. But then ultimately, with a V-shaped recovery, the pandemic sort of resolves itself, and it leads to a total cumulative economic output for the year 2020, where the GDP is down maybe 2 or 3%. Again, the media is going to talk about the annualized number at 15%, but it's really only a quarter number that you then extrapolate out to the year. So even if you get a 15% annualized number for the second quarter, for the year, you could certainly have the economy on track to maybe be down only 2 or 3%. Certainly not good by any stretch of the imagination, but that's the V-shaped recovery. The U-shaped recovery, and where we see the reopening happening more on a slow and trickle kind of basis. And it seems like from a government regulatory perspective, that may be more the track of where we are on. We're seeing in some states that have already opened, Georgia being a good example, where people aren't coming out in droves. They're coming out in a trickle, and effectively the stay-at-home orders have a residual effect in that people continue to kind of stay at home and don't go out as much. So that effectively gives you a residual tail, a greater damage, if you will, to the economy in the second quarter, where you could see the economy, again, for the second quarter on an annualized basis being down like 30%, again, well past any record that we've seen. But then in quarter three, it becomes a much sharper recovery. But again, for the year, the economy still looks down probably about 5%. So again, the V-shape, overall economy down 2 or 3% for the year. More the U-shape, you're probably looking at more 5 or 6% for the year. And then of course, the last one, the W, is the one where you have a dramatic decline in the second quarter on the order of, say, 30%. That rolls to quarter three. There's a resurgence of cases of COVID, return to stay-at-home orders, and there you could have some GDP numbers that have a much greater impact. So you could have a GDP of, say, down 7%. So hopefully you see the difference between the V, the U, and the W, why the V is the best case scenario, U better, W worst case scenario. And you see how, if you kind of look at the economic numbers, where, in that V case, you still have a negative growth year for the GDP at 2 or 3%. The U would be more like a 4 or 5%. The W, worst case scenario, economy for the year down 7, 8%. So again, pretty dramatic numbers. You're still looking at an economic output, okay, that for the quarter is going to break all records whatsoever. We just saw the economic number come out this past week for the first quarter, right? And it was a decline of 4.8%. And again, be careful on these numbers because they're the annualized numbers, right? So they take a quarter and they extrapolate it out to a year. So 4.8 is the annualized number for Q1. It's expected that Q2 obviously much worse than that. So what are the driving factors, okay, that are ultimately going to determine whether it's a V, a U, or a W? And I think there are certainly some factors that we want to pay particular attention to as we look at what's happening in the economy and look forward to see what shape that recovery will happen. By the way, in all three of these scenarios, there is in fact a recovery. So let's be very, very clear on that. It's just a function of what precisely it looks like. So we're going to start to put some factors into that, some things for us to look at to determine exactly what shape that recovery is happening. And we'll do that right after this break here on Dollars and Cents. This is Joel Garris, Nelson Financial Planning News Radio, WFLA, Orlando.